Hey, all, welcome back. As you may have noticed, it's not just chip stocks that have been taking a beating recently. This first week in August and last week in July have been especially hard on stocks that we cover here at Chip Stock Investor. But one of our favorite stocks of this year, Airbnb, has also taken a big hit in the stock price. But Q2 was not so bad. But we need to talk about what the future potential is for Airbnb and whether or not this stock is a buy at these levels. This episode is sponsored by our friends at public.com. Are you dissatisfied with your savings account? Check out public.com.
Public.com has just launched its new high yield cash account, offering an industry leading 5.1% APY. There are no fees, no subscriptions, no minimums or maximums, just 5.1 interest on your cash. You can transfer or withdraw cash as often as you like, and you get up to $5 million in FDIC insurance. Grow your cash at an industry leading 5.1% APY with a high yield cash account at Public. Go to public.com to learn more. Yeah, it seems the R word has reappeared as at least a threat in everybody's imagination. The R word being recession. Okay, so the folks, as Casey mentioned, Airbnb, one of our favorite stocks of 2024, was actually named to our list of top picks of non-chip stocks for the year. If you're wondering why we're covering these, well, over on Semi Insider on our Discord channel, we talk about our whole portfolio and we talk a lot about things other than chip stocks. We think it's important to be diversified. So Q1 2024, we did this update 3 months ago, pretty solid quarter, great increases in profitability across the board. We talked about what's next for the marketplace. It sounded like some big things were coming later on in 2024. And it turns out, yeah, maybe some big things are coming for 2024, like an economic slowdown in the United States and North America in particular. Or maybe this is just a return to normal travel trends. What do we think? Well, I think first and foremost, let's maybe run through the Q2 numbers and the outlook for Q3. I think that'll help inform everybody on what's actually happening here.
Yeah, the revenue was up to 2.8 billion, 11% up year over year, 20% net income margin, 555 million. Free cash flow was $1 billion, up 16% year over year, and a 41% trailing 12-month free cash flow margin, which was the same as last quarter.
Yeah, really good stuff. And the big takeaway here for us, I know not everybody feels the same about this business, but without a doubt, this is good here. You see profit margin on all fronts increasing at a much faster rate than revenue. So this is good news for obviously a large business already, but still a business that's rapidly scaling.
Now, moving on to the outlook for Q3, Airbnb does expect to deliver some great sequential revenue boosts. In the forward guidance for Q3 2024, you can see that revenue is expected to be right around 3.7 billion, which is an 8 to 10% year over year growth and a pretty substantial increase quarter to quarter. And Q3 is going to cover the summer travel season. That's why we see that big boost in revenue. But they did want to point out some possible headwinds for the upcoming quarter. They mentioned that shorter booking lead times globally and some signs of slowing demand from US guests, they do expect to take effect in the following quarter.
Now, as for profit margins, this seems to be, besides the slowdown in revenue growth rate, this adjusted EBITDA margin in Q3 seems to have caused a bit of worry as well. They actually expect that because of marketing expense, that there is going to be a dip in Q3 and the actual margin year over year. However, for full year 2024, adjusted EBITDA margin is expected to be at least 35% and full year free cash flow margin to be several percentage points higher than the EBITDA margin. Now, there's been the focus on the Q3 statement that EBITDA margin is going to dip. However, for the full year basis, at least 35%. Remember, that's still great sequential improvement because in Q2, the EBITDA margin was 33%, and in Q1 of the year, it was 20%. So this guidance implies a sizable increase in adjusted EBITDA margin as we exit the year. Now, for For reference, full year 2023 adjusted EBITDA margin was 37%. So even though Airbnb seems like it will be exiting this year, 2024, close to record profit margins, that's what seems to have the market feeling a little bit glum on this business right now, especially in Q3 with the higher marketing expenses expected.
CEO Brian Chesky has some lofty goals for Airbnb. These are the three things that he talks about during each earnings call. The first thing, making hosting on Airbnb mainstream. They currently have over 8 million listings. They want to perfect the core service by making it more reliable and affordable. And what that means is removing those bad listings that are weighing the business down and then expanding into newer markets. Currently, the core group is in the United States, the UK, France, Australia, and Canada. But other areas like Asia are certainly an emerging market, and they want to continue expanding that market.
Yeah, interesting things to note from the earnings call. They did talk about Asia and some of the unique challenges with the Airbnb site and the app. In Asia, they have to do some extra work based on some data that they have on consumer preferences and consumer behavior. The Airbnb app we know here isn't going to work as well in many markets in Asia. So they've been working on that to get that dialed in. Some of the other newer markets that they're making some headway in are within Europe, like Germany. And then they also mentioned that Latin America is currently one of its fastest growing geographies. So pretty incredible if you think about those 8 million plus listings, most of them being in those core markets. There's still a ton of room for Airbnb to expand.
The other thing that has started being advertised on Airbnb is this icons part of the app. They've been focusing on adding more experiences to their platform, and this icons is just another way to provide a unique experience for customers. You can stay at Barbie's Malibu Dream House or in Prince's Purple Rain House, hang out with Kevin Hart. Next thing you know, you'll see hang out with Casey and Nick.
We talked a bit about that last quarter. Hopefully, we didn't give any of you false hopes that there's going to be a chip stock investor icons listing anytime soon. That's currently not in the works.
This is an interesting point, though, from Chief Financial Officer Ellie Mertz. She said that customers are not necessarily stopping traveling. What they're doing, though, is waiting until later to book those vacations and not putting it out so much. Because of the pandemic, many folks were getting those vacations booked a long time in advance because of the instability of the world we were living in. But now that there's a little bit more confidence, people are relaxing that a little bit more.
Mhm. Yeah, and this all ties into that point about the slowdown in the economy and some worry about the consumer weakening, especially in the United States. Interest rates are still high. We've already mentioned this in the last week already about the Fed keeping interest rates at that elevated rate through at least the middle of September. And so of course this came up multiple times in the Q&A session on the Airbnb call about what's the state of health of these core users of the Airbnb app, the Airbnb core service. And later on in the call, Merckx continued just giving some historical context. Now, a lot of this predates the Airbnb IPO a few years ago. She mentions, though, back in 2019 and then to today, 5 years later, those lead times on the Airbnb platform are actually about the same. And a lead time, what they're referencing here with this phrase, a lead time, is how long in advance someone books the accommodation for travel. And so we're basically, it seems like maybe just getting back to pre-pandemic levels. And so the effect is if you have a long lead time, everybody's scrambling to get an accommodation booked well in advance, let's say 2, 3 months in advance. And then all of a sudden, those same group of people, compared to last year, where they were maybe 2 to 3 months booking in advance, now in 2024, it's maybe just 1 month or maybe just a few weeks or a week in advance of the trip. What that ends up doing is causing some uncertainty for Airbnb in figuring the timing of their revenue recognition and figuring out how many people are actually going to book a trip this year. So again, it seems like this is just a return to normal as much as it is a slowdown in economic growth and potential weakening in the consumer. And so where there was some excitement that Airbnb was getting ready to announce some really, really big sweeping expansion plans to their platform later this year, the last thing that you want to do is launch some big new things amidst a big slowdown in consumer spending. So it sounds like Brian Chesky and the top team are maybe pushing back some of those plans into 2025.
Exactly. And this makes a ton of sense. What he did say, however, was a couple of things that they plan on doing. The first thing mentioned in this quote is a co-hosting marketplace. And this I really like this idea because a lot of people may be in this position. Maybe you have a home that you could Airbnb but don't have the time, or maybe you have the time and would like to create a position for yourself, but you don't have the real estate for it. So this platform could help match those two people up together so that it could be a mutually beneficial business.
Yeah, sounds like another play on the gig economy and a way Airbnb can continue to make its core service better. Maybe this can also help with that affordability and quality issue that they've been having in some markets as well. Maybe if more people can get some listings for like just rooms or apartments or guest houses or something onto the platform via a co-host, maybe this helps strengthen that core platform that is one of their primary goals right here in the next few quarters.
The second thing that he talked about was the experiences. Once again, experiences has been around for a little while now, but they have constantly been learning some new lessons from that. They want to make these experiences more unique, more affordable, and they shouldn't just be photos. He mentioned specifically his goal is to make these very unique experiences make people feel like they're getting a one of a kind deal.
Yeah, and that makes a lot of sense too, given the uniqueness of Airbnb's platform with the unique places to stay. Why not make the experiences section just as unique? Also of interest in this quote, it sounds like starting in 2025, that's when they'll relaunch the experiences platform. And then every year starting next year, there will be a large new product launch or service launch. So again, a bit of a delay here from Airbnb in the big expansion of the platform that we were expecting in 2024. Not yet.
That's not necessarily a bad thing, though. That's just the C suite course correcting and making good decisions for what's happening in the market, in their industry. But what about Wall Street? What has Wall Street been expecting for Airbnb?
Well, again, I think that the primary worry here is not just the revenue slowdown. I think investors can handle that. The explanation, lead times getting shrunk back down to pre-COVID, pre-pandemic levels makes sense. It seems like maybe that's just a temporary effect, assuming that consumer confidence and related travel expenditures doesn't deteriorate further from here. But I think the double whammy in this report was the possibility that adjusted EBITDA margins could dip slightly from 2023 because of the elevated marketing expense the second half of this year as they continue to launch versions of the Airbnb app into unique markets where they need, a unique Airbnb experience for a specific market, expanding into places where they just feel like they don't have enough listings compared to their core, as well as getting some of these new platform features ready for 2025. So the market essentially de-risking this thing, and that's what this chart is. We've already seen Wall Street analysts come in and downgrade their price target on Airbnb stock. That's the blue line here. The orange line is the actual stock price. It's not a dead ringer buy indicator, but historically for the last couple of years, few years, and I think this kind of goes well with our contrary nature. About the time Wall Street starts saying, okay, we're downwardly revising our price target, that's generally speaking about the time that you might want to take a harder look at a stock like this one, assuming it's a long-term winner.
Good points. And just a reminder, we created these charts with our friends from FinChat. You can check out a link below in the description that gets you 15% off your membership. You may want to check it out. Great tools there that you can use for your own analysis. And Airbnb's valuation has remained pretty steady. This chart shows it from January 2023 when it was ultra cheap And now on a forward price to earnings basis, you can see 26 to 27 times, and price to free cash flow on a forward basis, 18 times. So still relatively reasonably priced for us, Nick.
Yeah, I think so. And again, we've discussed this a couple of times now. Check out the last video 3 months ago for the explanation as to why the disparity between these two valuations. One of the big things, though, is that tax benefit that they realized that's going to fall off here in the next couple of quarters, and that affects GAAP earnings per share, but it's a non-cash event, so it doesn't affect free cash flow. So that's the disparity between the two. Ultimately, at the end of the day, yeah, I know there's still the debate raging out there about elevated employee stock-based compensation and how you should account for that, how you shouldn't account for that. The way we do it is no, we are not going to be subtracting stock-based compensation out of free cash flow. That's what GAAP earnings per share are for. That accounts for it. To measure free cash flow over time, we just divide it by shares outstanding, which, if there is truly a stock-based compensation issue, that will take care of the problem. As far as we're concerned, what we've seen since we started buying Airbnb, we actually talked about this when our channel was still pretty new in the fourth quarter of 2022. That's when we bought our starter position in Airbnb. We bought again in 2023. And then, of course, we made it a top chip stock of 2024. So we bought a couple of times now in 2024. And I think we're going to be buying again.
Seems like a good time to add to our position. Another company that we do like in the online accommodation space is Booking Holdings, formerly Priceline. We'll be talking more about that over on our Discord channel. You can check that out via a Semiconductor Insider membership here on YouTube or over on Discord. Just $5 a month gets you access to all kinds of exclusive content, live Q&A events, video notes, published manuals. You get it all for just $5 a month. So check that out below, and a link to FinChat as well in the description below for 15% off. And thank you so much. We'll see you again very soon at Chipstock Investor.